Have you ever felt like your trading strategies are missing that extra edge? What if you could combine the strengths of 3 powerful indicators into one super powerful tool? In this video, I'm going to reveal the Pulse Oscillator by UAlgo, a game-changing indicator that integrates the RSI, the CCI, and the Stochastic oscillator into one cohesive system. If you happen to find value in this video, remember to leave a like. Let's get into it. Now, to get started with this strategy, we need to add the Pulse Oscillator to our chart. To do that, we're going to go to Tradingview, which is the trading platform that I'm going to be using. If you haven't signed up yet, there's going to be a link in the video description for you to do that. Once you're all set up, open the indicator search tab and type in Pulse Oscillator. Be sure to select this one by UAlgo. So what makes the Pulse Oscillator so special? Well, this indicator is designed to capture market momentum and detect trend changes by combining the strengths of 3 well-known technical indicators, which include the Relative Strength Index, the RSI, we have the Commodity Channel Index, the CCI, and the Stochastic oscillator. By integrating these, the Pulse Oscillator provides a comprehensive view of market conditions, reducing the weaknesses of individual indicators and enhancing the reliability of trading signals. The multi-indicator integration is crucial because it helps filter out noise and false signals that you might get from relying on a single indicator. The CCI identifies cyclical trends in trading assets, and the Stochastic oscillator compares a particular closing price to a range of its prices over a certain period. By combining these, we get a weighted momentum oscillator that can adapt to different market conditions. Now, let's break down the different components of the Pulse Oscillator. At the top of the oscillator, you will notice an overbought level. At the bottom, there's going to be an oversold level. These levels are going to help us identify potential reversal areas in the market. Now, the main component of this indicator is going to be this trend ribbon, which is going to be visible in the middle. It's composed of 2 lines, a fast line and a slow line. These lines are going to be used to generate buy and sell signals. A buy signal is going to be triggered whenever a fast line crosses above the slow line. This is indicated by a blue dot on the ribbon. Conversely, a red dot signifies a sell signal, which occurs when the fast line crosses below the slow line. Additionally, this ribbon changes color to indicate the overall trend of the market. A green ribbon indicates a bullish trend, and a gray ribbon indicates a bearish trend. This visual representation makes it easier to interpret market conditions at a glance. Now, looking at the settings of this indicator, you will notice there's going to be several customizable options. Most importantly, it allows us to change the individual weights of the RSI, the CCI, and the stochastic indicators. You can adjust these weights to emphasize one indicator over the others based on your trading strategy. You can also change the periods, the smoothing techniques, and the levels to fine-tune the indicator to your trading style. For example, you might increase the RSI period for a longer-term view or adjust the smoothing method to filter out more noise. However, for this video, I'm going to leave all the settings to their default values to keep things straightforward. Now, let's explore how we can use the Pulse Oscillator to trade on its own. The oscillator provides clear buy and sell signals based on the crossovers of the fast and the slow lines, as well as the color changes in the ribbon. Now, here's a long trade example. Suppose you're monitoring the chart of AUD-CAD on the 1-hour time frame. You notice that the fast line crosses above the slow line, indicated by a blue dot. Simultaneously, the ribbon turns to green, suggesting a bullish trend. On top of all that, this oscillator is also emerging from an oversold area, adding further confirmation. Well, in this case, you could consider entering a long position. Your stop loss could be placed below the most recent swing low, and you might aim for a take profit based on a previous resistance level, or you may even want to use a risk-reward ratio of 1 to 1.5. Now, this indicator on its own, it's pretty decent, but in order to make it even better, we have to add an additional confirmation indicator so we can craft a strategy out of the two. Let's add the PineTrades Market Beacon to our chart. This combination is going to help us craft a more robust trading strategy. Once you've added it, double-click on it so we can access the settings. On the Inputs tab, we want to disable the following options: the Buy label, the Sell label, B, S, Plot candle, Boxes, Labels, Indicator Fails, Lines. After that, click OK. The PineTrades Market Beacon is a powerful tool that provides additional buy and sell signals. By customizing its settings, we've streamlined it to display only essential information that we need. This indicator is going to print long and short signals directly on our chart, helping us to identify potential trend reversals or even continuations. By combining these signals with those from the Pulse Oscillator, we can increase the accuracy of our trades. So how can we take long and short positions using these two indicators? Well, here's an example. For a long trade, you first of all want to identify a buy signal on the Pulse Oscillator. For that, you want to look for a blue dot where the fast line crosses above the slow line. Next, you want to mark the signal. Place a vertical line on this buy signal for reference. The next condition is going to be to check for a short signal to the left of this vertical line. So look to the left of the vertical line and ensure that there was a short signal printed by the PineTrades Market Beacon indicator before the buy signal. The first condition is to confirm a long signal to the right. Look to the right of the vertical line and see if a long signal appears from the PineTrades Market Beacon. Confirm the bullish trend. Draw a trend line to ensure the market is trending upwards. If all these conditions are met, you have a valid setup. Enter a long position. Place your stop loss just below the most recent swing low. Set your take profit at 1.5 times your risk. As the trade progresses, you will notice that it moves in your favor and eventually it decides to hit the take profit. This was a profitable trade. Keep in mind that the arrangement of these three signals must be exactly as described. A buy signal from the Pulse Oscillator preceded by a short signal from the PineTrades Market Beacon and then followed by a long signal. Any other arrangement other than this should be considered invalid. Now, for a short position, we're going to do the opposite. You want to identify a sell signal on the Pulse Oscillator. Look for a red dot where the fast line crosses below the slow line. Mark the signal. You want to place a vertical line on this signal. Check for a long signal to the left. You want to look to the left of this vertical line and ensure there was a long signal from the PineTrades Market Beacon before the sell signal. Confirm a short signal to the right. You then want to look to the right of the vertical line to see if a short signal appears from the PineTrades Market Beacon. Confirm the bearish trend. Draw a trend line to ensure that the market is trending downwards. Once you have these conditions, you have a valid trade. You enter a short position here, place your stop loss above the most recent swing high, set your take profit at 1.5 times the risk. Letting the trade run, and it was profitable. Now, remember, the PineTrades Market Beacon is a private indicator. I've only showcased it in this video because I believe it's a powerful tool that complements the Pulse Oscillator exceptionally well. If you're interested in accessing it, you want to click on this link down in the video description and it's going to take you to this page where you're going to get to try it risk-free for 7 days. If you find it extremely valuable like I did, you can purchase it for long-term use. Plus, using the link in the description gives you a 20% discount, so be sure to take advantage of that offer. That's been it for this video. I really hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.